Welcome back to the deep dive, where we really try to sift through everything out there and give you the insights you actually need. Today, we're digging into something that's been making, well, pretty big waves in crypto lately. Vitalik Buterin, the co-founder of Ethereum, he's back in the spotlight as an on-chain billionaire. Now, this isn't just some flash-in-the-pan headline. It really points to some bigger shifts in the market, obviously the price of Ether surging, and what it all kind of means for crypto overall. For this deep dive, we've pulled together quite a bit of material. We're looking at analysis from blockchain intelligence firms. Arkham is a big one here, market data from places like Nansen and CoinGlass, and even some really crucial direct comments from Vitalik himself. So our mission, as always, is to pull out the most important bits of info from all this, basically give you a shortcut to understanding what's going on with this pretty significant development.
Okay, let's unpack this.
What's fascinating here, I think, is that Buterin hitting billionaire status again, it's more than just, tracking someone's wealth. It's actually a visible on-chain signal about Ether strength and maybe surprisingly the market maturing, though it's still, let's be honest, pretty dynamic. And that phrase on-chain billionaire, it's really specific, isn't it?
Yeah, it is. It sounds different.
Right, because in traditional finance, wealth is usually hidden behind layers of private banks, trusts, shell companies maybe. It's intentionally opaque a lot of the time. But in crypto, especially for someone like Buterin, being an on-chain billionaire means his main assets, his ETH mostly, are right there on the public blockchain, verifiable.
So anyone can basically go look.
Pretty much, with the right tools, yeah.
Yeah.
You can trace the wallets, see the transactions, check the value based on current market prices. It's all recorded on that distributed ledger. It's wealth that's literally out in the open for inspection. It kind of demonstrates that core idea of transparency and decentralization that,
Yeah.
underpins the whole technology he helped build. It's a really different way of thinking about value and ownership compared to the old ways.
And it really was a specific moment when this news hit. Arkham, the blockchain intelligence firm you mentioned, they were the ones who announced it. Vitalik Buterin has reclaimed his status as a 10-figure crypto holder. Wasn't a gradual thing either. It felt quite sudden. And the trigger was super specific. Ether, had just smashed through the $4,000 mark. First time in what, 8 months?
8 months, yeah.
A significant period.
Definitely. So that $4,000 level, it's more than just a number. It feels like a big psychological barrier for the market. So when Arkham, who are known for being pretty meticulous with their on-chain digging, when they say he's an on-chain billionaire again, what does that actually involve? How do they verify that claim beyond just looking at the price?
That's a really good question because it's not just a fancy label. Being an on-chain billionaire is something they can actually demonstrate using public data and, well, some pretty smart analysis. Like you said, Arkham specifically stated he was an on-chain billionaire again, and they backed it up. At the moment they published, his identifiable public wallets held assets worth around $1.04 billion.
Okay, so how do they get to that number? Are they just tracking one wallet?
No, it's usually more complex than that. Firms like Arkham, they use a whole suite of techniques. They track known addresses, sure, but they also work to identify clusters of addresses that likely belong to the same person or entity. They look at transaction patterns. Sometimes people publicly disclose addresses. They cross-reference information. It's kind of like digital forensics meets big data, all running on that transparent blockchain data. So they can build a pretty solid picture of someone's public crypto holdings.
Right, so it's not just a guess.
Definitely not. And the foundation of Buterin's valuation right now, the vast majority of it, is his Ether holding. The report specified 240,042 ETH.
Wow, that's a lot of ETH.
It is. And that amount obviously directly ties his wealth to the performance and adoption of the Ethereum network itself. It's a huge chunk of his portfolio. But it's important to remember, it's not all he holds on chain. Arkham also pointed out smaller stakes in other tokens.
Ah, okay. Like what?
Things like A of Ethereum, that's ETH, White Rock, which is White, Mudang, and also Wrapped Ethereum, WETH.
Wrapped Ethereum. Okay. That makes sense for DeFi. What about the others? Are they significant?
Well, ETH, for instance, is basically an interest-bearing token from Avo, the lending protocol. So holding that suggests he's, actively participating in DeFi on Ethereum, not just holding ETH passively. And WETH, as you said, is essential for using ETH in lots of DeFi apps and smart contracts. The other smaller ones, White, Mudang, they could be investments, maybe tokens from projects he supported early on, or just things he acquired through interacting with the ecosystem. The point is, while these smaller holdings show some diversification and engagement, they're really just a tiny fraction compared to his main ETH stack. His billionaire status fundamentally hinges on the price of Ether.
Gotcha. So his wealth is overwhelmingly tied to ETH itself.
Exactly. And the immediate catalyst, the thing that pushed him back over that billion-dollar line, was absolutely Ether crossing $4,000.
Yeah.
That level hadn't been touched since, I think it was December 2024.
Yeah, sounds right.
So it highlights how fast things can change in crypto. A relatively modest percentage jump in ETH's price, when you're holding that much of it, suddenly translates into massive dollar value changes, hundreds of millions potentially.
It really drives home the volatility, doesn't
It
it?
really does. You can literally become, or stop being, a billionaire based on a single price point fluctuating over hours or days. And because it's on chain, everyone can see it happen in near real time.
That real-time aspect is wild,
Yeah.
and the speed, incredible. But as you hinted, this isn't actually the first time he's hit this kind of valuation, is it? He's been a billionaire before.
That's right, yeah. He's been here before. He first crossed that threshold back in May 2021. He was only 27 then.
27. Wow.
Yeah. And that milestone, interestingly, also coincided with a big moment for Ether itself. It was the first time ETH broke past $3,000.
Ah, okay. So $3,000 back then, $4,000 now. How did his holdings compare?
That's where it gets interesting. Back in May 2021, according to Etherscan data from the time, he actually held more ETH, around 333,500 ETH.
More ETH. But the value was similar.
Almost exactly. That 333,500 ETH was valued at roughly $1.029 billion then. Today, he has significantly less ETH, about 240,000, but it's worth slightly more, $1.04 billion.
So the price per ETH has gone up a lot since his first time as a billionaire.
Precisely. It tells a really clear story about Ether's long-term price appreciation. Even holding fewer coins, the increased value per coin pushed his total wealth back up and even a little past where it was before. It shows the asset itself has matured, gained value significantly as adoption and utility have grown.
That's a crucial point. Fewer coins, same or higher value.
Exactly. And that first time, in 2021, remember, came after a period of absolutely explosive growth for Ether. Its price had something like quadrupled just from the start of that year, from around $700.
Right, that was a crazy bull run period.
It really was. So it just underscores the kind of volatility, but also the massive growth potential that assets like Ether can have. His wealth then was a direct result of that huge market surge. Now we're seeing a return to those levels after a major correction and recovery, which suggests that cyclical nature you mentioned. Volatility is there, but maybe there's a longer-term upward trend underneath it all.
It's also pretty intriguing that he's historically been quite open about his holdings, especially for a founder. I remember reading way back in October 2018, he publicly stated he'd never held more than 0.9% of the total ETH supply.
Right. I remember that statement.
And he also said back then his net worth had, quote, never came close to $1 billion. This was obviously a very different market environment. What does that kind of transparency and those specific statements from years ago tell us about his, I don't know, his long-term thinking or philosophy about holding ETH? Is it about decentralization?
I think that 2018 statement is really revealing. Saying he held less than 0.9% of the supply, especially back then, it speaks volumes about his commitment to decentralization, or at least the perception of it.
How so?
Well, think about traditional companies. Founders often keep huge stakes, giving them loads of control, voting power, concentrated wealth. Buterin saying he deliberately kept his holdings relatively small, it signals he didn't want Ethereum to be seen as, his project where he held all the power and financial upside. It kind of reinforces the idea of Ethereum as more of a public utility, a neutral platform, not just a way for the founder to get immensely rich or control everything. It helps build trust, encourages wider community involvement, which is pretty vital for a decentralized network.
Yeah.
It suggests the project's health and ethos were maybe more important to him than maximizing personal share.
That makes sense. A philosophical choice almost.
It seems like it.
Yeah.
Now, what's fascinating is connecting that sort of cautious, maybe even principled stance on personal holdings with the reality of the market just repeatedly making him a billionaire anyway.
Right. The market doesn't really care about his philosophy.
Exactly.
Yeah.
Despite him maybe not wanting an oversized stake, the sheer success and adoption of Ethereum has just driven the value of the ETH he does hold through the roof
Right.
multiple times now. So you have this tension, right? The founder's ideals about distribution versus the raw economic forces of a successful global asset. His wealth isn't necessarily because he chased it, but because the thing he built became so valuable to so many people.
It raises interesting questions about what decentralization really means when the founder still ends up incredibly wealthy just due to market dynamics.
It absolutely does. Does success inevitably lead to some form of centralization, even if just in terms of wealth concentration via market price? Or is it just proof that the market operates independently of any single person's intent? It's something to think about, for sure.
Definitely something to chew on. Okay, so moving beyond Vitalik's personal balance sheet, the sources we looked at also show some really strong momentum for Ether itself as an asset. We saw it jump, another 6.38% just on Saturday, hitting $4,332 at one point. And it's holding strong around $4,244 now. These are solid gains.
Yeah, very strong performance recently.
And what's quite interesting, during this recent Ether surge, Bitcoin's dominance, its share of the total crypto market cap, actually dipped a bit. Often you see Bitcoin lead the charge. So what's giving Ether this particular boost right now? What's driving this specific strength relative to even Bitcoin?
Well, there's definitely a strong feeling among crypto traders right now that Ether is really gunning for its old all-time high. Remember, November 2021, it hit about $4,878.
Right, the peak.
Yeah. There's a palpable sense in the market that reclaiming that level is not just possible, maybe imminent. We saw quotes from traders like crypto trader Ted on X, basically saying it's just a matter of days now.
Wow, bold call.
It is. But that kind of sentiment, especially when it becomes widespread and gets echoed by technical analysis, can really fuel buying pressure. People position themselves for the breakout. And digging into the mechanics a bit more, one really potent factor here could be a potential short squeeze.
The short squeeze. Always dramatic.
Always. CoinGlass data, which tracks derivatives markets, showed something pretty striking. If Ether hits $4,500, that would put about $1.35 billion worth of short positions at risk of liquidation.
Okay, break that down for us. What does that mean, at risk?
So a short position basically is a bet that the price will go down. Traders borrow ETH, sell it, hoping to buy it back cheaper later. It's a bearish bet.
Got it.
Now, if the price goes up sharply instead, those short sellers start losing money. If it goes up enough, they get margin calls. They need to add more money to cover potential losses. Or the exchange just automatically closes their position by buying ETH back at the market price to limit the damage.
Forced buying.
Exactly. And that forced buying is the squeeze. When lots of shorts get liquidated around the same price level, it creates this sudden surge of buy orders, which pushes the price even higher, which then triggers more liquidations, and you get this cascade effect.
A feedback loop?
Precisely.
Yeah.
So the fact that there's $1.35 billion in shorts clustered around $4,500 means there's a huge potential pool of forced buyers waiting just above the current price. If ETH keeps climbing and hits that level, it could trigger a very rapid, very sharp upward move as all those shorts are forced to cover. It adds a lot of potential fuel to this rally towards the all-time high.
That's a huge amount of potential buying pressure just sitting there.
Yeah.
Very interesting. But okay, here's maybe an even more fundamental and perhaps more sustainable driver we saw in the sources. The growing momentum around Ether ETFs, the exchange-traded funds.
Oh yeah, the ETFs. That's a huge narrative right now.
It really seems to be. This isn't just about traders anymore. This is about institutional money. Arkham pointed out some really eye-catching figures recently. One day, Ether ETFs apparently saw $461 million in total flows, while Bitcoin ETFs only saw $404 million.
That's a big deal. ETH inflows beating BTC inflows.
Exactly. That feels like a significant shift. And it wasn't just one day. Looking at Farside data, over 5 recent trading days, U.S. spot Ether ETFs pulled in a net $326.6 million, while Bitcoin ETFs actually saw outflows in that period, losing $253.2 million. Ether's clearly winning the inflow battle right now.
Yeah, those numbers are pretty stark.
So what does this tell us? Why are institutions suddenly favoring Ether ETFs over Bitcoin ETFs? What's changed?
It's incredibly significant. For ages, the story was Bitcoin is the gateway for institutions into crypto. It was the main, sometimes only asset they'd consider.
Right, Bitcoin first.
But these flows suggest a real shift. Institutions, we're talking asset managers, hedge funds, maybe even pension advisors, eventually are looking beyond Bitcoin now. They're starting to see Ether not just as another crypto, but as a distinct asset class with its own unique value.
What value specifically, do you think?
Primarily, its role as the foundational layer for so much of the crypto ecosystem, right?
Yeah.
DeFi, NFTs, DAOs, stablecoins, the whole Web3 vision. A lot of it is built on Ethereum. Institutions are likely starting to grasp that the Ether isn't just digital gold, like Bitcoin is often framed. It's more like programmable money, or the fuel for a decentralized internet.
Hmm.
It has utility, cash flows through staking potentially. It underpins economic activity. That's a different investment thesis than Bitcoin.
So they're diversifying within crypto now.
Exactly. They're getting more sophisticated. They see Bitcoin, they see Ether, and they see different reasons to hold each, or maybe even prefer Ether at certain times based on ecosystem growth or upcoming upgrades.
And how do these ETF flows actually impact the price?
Well, in a couple of key ways. First, direct demand. When money flows into an ETH or ETF, the company running the ETF has to go out and buy actual ETH on the market to back the shares they issue. That's direct buying pressure, taking supply off exchanges.
Okay, simple supply and demand.
Right. Second, it changes the market structure. Institutional buyers tend to be stickier, longer-term holders compared to, say, retail day traders. Their consistent buying can absorb selling pressure, create a higher price floor, and potentially reduce overall volatility over time.
Making the market more stable.
Potentially, yeah. It adds a layer of more stable long-term demand that wasn't really there before at this scale. It legitimizes Ether in the eyes of traditional finance, which can attract even more capital down the line.
So thinking long-term, what could this sustained institutional interest mean?
Well, if this trend of strong inflows continues, you could see Ether start behaving a bit more like a traditional mature asset. Maybe less extreme volatility, more correlation with broader market trends as it gets integrated into mainstream portfolios. It could really accelerate adoption by making it accessible and, frankly, acceptable to a much wider range of investors who wouldn't touch crypto directly before. It feels like we might be watching the beginning of a significant re-rating of Ether by the established financial world. They're finally recognizing its utility beyond just speculation. This raises an important question, though.
Go on.
While this institutional validation is happening, what other forces are at play?
Right, because amidst all this positive news, the price surge, the ETF flows, there's this interesting counterpoint, a warning, really, and it's coming straight from Vitalik Buterin himself. While a lot of people might be pointing to these things called Ether treasury companies as helping drive the price up, Buterin recently came out with a pretty strong caution against this exact trend. That definitely caught my eye.
It's a very important perspective to include, yeah.
So first off, what exactly are these treasury companies he's talking about? And why would the founder of Ethereum be worried about something that seems to be, boosting its price? What's the risk he sees?
Okay, so the term Ether treasury companies isn't super formally defined everywhere, but the context suggests these are entities, maybe corporations, maybe DAOs, maybe investment funds that are holding significant amounts of ETH on their balance sheets.
Like corporate treasuries holding cash, but with ETH?
Sort of, yeah. They might be accumulating ETH as a reserve asset, or maybe using it actively in DeFi strategies, perhaps staking it, lending it, using it as collateral. Their buying activity, especially if it's large scale, can definitely push up the price by creating concentrated demand.
Okay, so they're big holders, potentially big buyers. Why is Buterin worried?
His warning was very specific and quite stark. He said, and I'm quoting here, "If you woke me up 3 years from now and told me that treasuries led to the downfall of ETH, then of course my guess for why would basically be that somehow they turned it into an over-leveraged game."
Over-leveraged game. That sounds ominous.
It is. He's pointing directly at the dangers of excessive leverage, which is a recurring theme in financial crises throughout history.
Explain leverage in this context. How could these treasuries become over-leveraged?
Leverage is just using borrowed money to amplify potential returns. You put down some collateral, borrow against it, and invest more than you actually own. Great if the price goes up, catastrophic if it goes down. In the context of these ETH treasuries, it could mean they're not just holding ETH. They might be borrowing heavily against their ETH holdings to buy even more ETH, or to invest in risky, high-yield DeFi protocols. Or maybe they're involved in complex derivatives linked to ETH, basically magnifying their exposure and their risk.
So if the price drops...
If the price drops significantly, these highly leveraged entities could face margin calls or forced liquidations. They'd be forced to sell their ETH quickly to cover their debts.
Creating that cascade effect again.
Exactly. But potentially on a much larger, more systemic scale, if many large treasuries are all doing similar leverage strategies. One big player getting liquidated could trigger others, leading to a rapid market crash. We saw versions of this in 2022 with firms like Three Arrows Capital.
Right, the contagion risk.
Precisely. Buterin's worry is that these large, potentially leveraged players could introduce a major systemic risk into the Ethereum ecosystem itself. They could turn what looks like healthy price growth into something fragile, a house of cards vulnerable to a sudden collapse.
Why does it matter so much that he's the one saying this?
Because he's not just focused on the daily price ticker, he's thinking about the long-term health, stability, and fundamental integrity of the network he helped create. A truly robust ecosystem needs to be resilient, able to withstand shocks, not built on unsustainable speculative leverage. He seems to be prioritizing that long-term stability over short-term price pumps that might come from risky behavior. It's a warning that not all price appreciation is healthy or sustainable. Some growth can actually introduce dangerous vulnerabilities.
It really makes you think critically about what's driving the price, doesn't it? Beyond just the numbers.
It absolutely does. It forces you to consider the quality of the growth, not just the quantity. Is it organic adoption and utility, or is it fueled by unsustainable leverage that could unravel quickly? It's a crucial distinction for anyone trying to understand the real state of the market.
That is a really powerful and, I guess, sobering perspective from Buterin. Okay, so wrapping things up for this deep dive, what a journey. We started with Vitalik Buterin reclaiming his on-chain billionaire status, saw how blockchain transparency makes that visible. We looked at the market forces pushing Ether up, strong sentiment, that potential massive short squeeze, and maybe most importantly, those surging institutional ETF inflows that are now beating Bitcoins. We also placed it in historical context, looking back at his previous billionaire moment and his interesting, long-held philosophy on decentralization and limiting his own stake. So, boiling it all down, what are the key takeaways for you listening to this?
Well, I think first, it underscores just how dynamic crypto wealth is. Valuations can shift incredibly fast, and on-chain data makes it transparent, for better or worse.
Right. Volatility is still the name of the game.
Second, institutional interest in Ether is clearly real and accelerating. The ETF flows are undeniable proof that big money is diversifying into ETH, recognizing its unique value proposition beyond Bitcoin. That's a major long-term positive signal. But yes. Third, Buterin's warning is crucial. We have to distinguish between genuine ecosystem health and price movements, potentially fueled by risky, unsustainable leverage. Short-term gains aren't everything if they compromise long-term stability.
So Buterin's wealth reflects the ecosystem's success, but his warnings point to potential dangers within that success.
Exactly. His status is a symptom of market sentiment and adoption. But his words highlight critical vulnerabilities.
Yeah.
It brings us back to that fundamental tension. Even in this new, decentralized world, old human behaviors like speculation and excessive risk-taking persist. And that leaves us with a final thought, maybe something provocative for you to mull over. When you have these powerful economic incentives pushing towards leverage and potentially risky behavior, what responsibility do individuals, DAOs, these treasury companies, what responsibility do we all have to ensure the long-term health and integrity of these decentralized networks, especially when the allure of quick, massive profits is so strong?
How do you balance innovation and profit-seeking with the need for stability and resilience in these systems?
That's the core question, isn't it? And it's worth thinking about how Buterin's specific concerns about leverage in the ETH ecosystem might mirror risks in other crypto projects, or even echo lessons from boom and bust cycles in traditional finance throughout history. Understanding those patterns of risk is key, whether you're looking at crypto or any other evolving market.